It feels like there's a lot of hand-wringing going on this year, a lot of anxiety about what's to come in 2019 and 20. We had a number of guests yesterday, including Ray Dalio, who suggested there was a recession headed our way come 2020. How much of that hand-wringing do you think is actually a contraindicator? Last year people were, all smiles. Year after year, the feeling here sometimes ends up being the opposite by the end of the year.
Well, there's a huge proximity bias here, right? So what happens over the previous couple of months is front and center in Davos. And you're right, what a difference a year makes. Last year, confidence was back. There was a lot of CEO optimism, a sense of the long aftermath of the slow growth financial crisis had finally drawn to an end, and good times were ahead. This year, filled with uncertainty, levels of concern, and you can pick your poison. I mean, it starts probably at the top with a general economic feeling as whether there's a slowdown. I think a more attention to the U.S.-China rivalry. Everybody knew China and the U.S. were rivals, but just not capital R rivals. And then you think about other subjects that are being talked about here. Brexit, I mean, certainly one of them. And, so most of the chatter is around what could go wrong as opposed to what could go right.
Take us inside the boardroom, though, in terms of companies that were thinking about capital expenditures, big investments that they plan to make in their business. How many of them are saying to you, actually, you know what, we were thinking of doing X, but we're actually just going to hold off because we don't know what's happening with this or that?
I don't think there's much hunkering down right now. I mean, ultimately, CEOs do what CEOs do. We try to look to the future. We try to guess the outcomes, and we listen to experts all over the world.
Okay, so then guess the outcome. What is the outcome?
The outcome is eventually we're going to have a recession, whether it happens in 2020, 2021, or 2022. It's eventual.
The clock always is going to strike midnight at some point.
So, but ultimately, let's remember, there's no better time to be alive. This is the greatest time in human history, and there's more opportunity than threat. So we can't, being in the risk business, and I've been in the risk business for more than 35 years, you get to understand there's always risk, and it's exactly a result of all the opportunity that exists. And so you can't ignore the risks, but ultimately focus as much on opportunity as anything else.
For you and other insurers, isn't the biggest risk that you never get a decent yield again on anything?
I'm not an insurer.
Oh, okay.
I'm in a better business. I'm an insurance broker.
But what about
the
people what about the people in that business? Is the insurance industry set up for 2.5%?
No, I think, listen, the insurance business is a terrific business overall. I look at it and I say there's very few businesses that actually are geared for societal benefit of not only protection, but enablement. Maybe we sell ourselves as an industry a little bit too much all about protection, but the reality is there is no investment without insurance. Insurance gives you the opportunity to take risk and
the average assumption that an insurance company made 10 years ago on what it could return per year versus...
Well, a lot of that's investment return.
Is it half?
No, but a lot of it's investment return. So if investment returns get better, insurance companies will do better. Okay. Insurance companies are better at managing underwriting risk than they have been in the past.
You can't get the risk-free rate of return that you used to be able to get.
I wouldn't say that. I would say it's more difficult. There's a lot of insurance companies. It's the most competitive industry globally. And so that essentially is good for my clients. But when I look at insurance companies, it's a tough place in the market for capital providers. I don't care if you're an insurance company, a bank, or other types of capital providers. It's a good part in the market for advisors because the world's more complex and the value of advisory has risen.
Let me turn it around. Are there businesses that are coming to you now asking for different types of insurance, meaning to insure different eventualities?
Absolutely. First of all, the age of risk has just begun, right? You take an area like cyber. Nobody bought cyber insurance 10 years ago, and now it's the fastest growing insurance product around the world, particularly in the United States. I mean, right now, about 85% of the cyber market is U.S.
By the way, what are the premiums on that? Like, how do you?
Well, the premiums are probably too low. But they'll be a function of losses. So as there are more cyber losses, then cyber premiums will rise.
But that's what I was going to ask you about the losses. Meaning, is the risk asymmetric really more to the consumer or more to the company? We just had Marriott on, for example, right? So hundreds of millions of people's identity. There was an identity theft issue. But it's hard for them to even identify what the true loss is, to either to the individuals and ultimately to the company. So are they paying in insurance to you that actually never gets really paid out? Maybe that's a good business for you.
Or is it asbestos?
Right.
No, there is. Well, that's the fear.
Yeah.
It won't be. It won't be an asbestos. It won't be a latency, but there could be a cyber hurricane.
Right.
Where there's a cyber event that impacts many companies at the same time.
And all of a sudden we realize what's being done
And then
with all
insurance
this
companies get worried about those kind of scenarios.
I think.
But a cyber tsunami.
Begins with an M. You like that better than cyber hurricane, Sorkin, or not?
It's probably better.
Cyber Sorkin.
I'll take that.
Cyber
Tsunami.
Outside of cyber insurance, what's another kind of new market that's popping up, something that boards of directors care about these days?
Well, yeah, boards of directors always start with D&O,
Yeah.
right? So it's
Directors and officers,
right? It's an important cover. But I think when you think about risks of the future, most companies buy physical damage and casualty liability types of insurance every year. But when they're looking at risks, the conversation's more about risks than insurance. And it's really about what does AI impact on the workforce? What's the impact of advances in broader technology? Virtual
Those aren't things that
reality?
people are buying insurance against.
But actually, we're in the boardroom talking about risk.
Right.
Insurance is only a partial solution.
Right.
The companies are going to live with these risks. Workforce of the future, big risk. Impact of AI,
Big risk.
big risk. Big opportunity as well.
Dan, thank you for being here.
It's my
Appreciate it
pleasure. Thank
very
you.
much.